So, there are two big mortgage conversations happening this week, and I broke them both down in this week's blog that we dropped on Monday. So, the first is that Fannie Mae is getting rid of that old 620 credit score hard stop in their automated system starting on November 16th of this year. That does not mean that underwriting standards are going soft. It just means that if you're a thin file buyer, maybe you're younger, maybe you're new to credit or mostly use debit, the system can actually look at your whole picture now, your income, reserves, rent history, and debt to income, not just one number. The second thing that everyone's buzzing about is this idea of a 50-year mortgage, and I have to talk about it. It's not a real program yet, but it's just being talked about as an affordability tool. On paper, yes, stretching a loan out that long lowers your monthly payment a bit, of course, but the trade-off is brutal. You pay a ton more in interest over time, and you build equity painfully slowly. I saw this meme with Leonardo DiCaprio's Wolf of Wall Street that said 400-year mortgages. And it just made me laugh out loud because that's exactly what it feels like to me. Can the American people get a product that actually makes sense for us? I know RFK Jr. had, which is a controversial name drop, I know. However, I have to bring him up because this was his idea. He floated the idea of government-backed low interest loans for first-time home buyers and for workforce housing, people that were building communities. Something like 3% fixed rates funded by tax-free government-backed bonds. That's the kind of thing that actually helps people build wealth, and it helps our communities become stronger. Then we're not just buying a property to pay hundreds of thousands of extra dollars to banks. If you want the full breakdown on both of these, who they really help and what the numbers look like, go check out this week's blog. I'll drop the link below.